To what extent, perhaps especially with regard to some of the smaller companies, do they even have, if you will, the documentation? Like, does every company have an ethics statement, or either a code of ethics, or even that basic infrastructure? And if not, how do they even go about putting that together? So maybe I could kind of ask you to kind of respond to that.
So what I've seen so far is companies, you start with your set of bylaws, and bylaws do cover some of the characteristics that have to be in the Corporate Governance and Disclosure Model Act, but it doesn't include everything. And I don't think it should. You know, I'm not sure necessarily you want to put in there about board performance issues and assessment processes, board training programs within your bylaws. I don't think you want to go down any of that path. Particularly because in your case, I think for the most of you, you need policyholder approval of changes in your bylaws, and that can become a very complicated process. What I've seen most companies do is you create a corporate governance manual that then includes many of the characteristics that are included in the corporate annual the CGAD, and it creates some flexibility on your part, so you don't have to be necessarily revising bylaws. If you don't, though, have things like term limits and things, I mean, some of those, and Joel might be better able to speak to this as to whether they require bylaw revisions or not, if you choose to go down the path of putting term limits in place for your board limits or age limits, for example. Again, what I've seen more often than not is a corporate governance manual that supplements the bylaws. That then would be this documentation source that Scott referred to that is used within the organization. So that would be my first suggestion as you begin to tackle this, is think about some document like that. Joel, you might have better comments.
Well, no, my thought is a company is not going to have all of these documents, particularly a smaller company. But I think an important part of this process and using the CGAD as an internal tool is to let the company say, sure. Because some companies are not going to have, you're going to have your basic corporate governance documents, you're going to have your bylaws, your committee charters, things like that. But as you go through this process, you might say, hey, we're too small. We don't need to have, you know, that sort of ethics statement or a particular document like that. But really, if you use the process to reflect on the company and say, you know, I hadn't thought about this before. Is this something we should be doing? Is this something we should implement? Is this something we should have? I think that's really, you know, from my perspective, that's the real benefit of the CGAD, is it forces the company to kind of look in the mirror and say, what do we have, and is what we have enough for who we are, what we do, and our size and exposure.
And Ron, I'm going to direct this to you because you kind of sat on both sides of the desk. Listening to Scott's comments, and I'll say that the lack of input that he got from the department is trying to prepare this. What I'm thinking about is any chance of getting a group or representatives from PAMIC to sit down with the Pennsylvania department and try to, ahead of time, kind of give them an opportunity to say, this is kind of what we're looking for. In other words, maybe kind of building like a model that the companies that are represented here could follow in terms of responding to the requirement.
I think there's generally a process in place to make that happen. We could either do it through the legislative development process, and it's not uncommon in some of the insurance laws to actually see a requirement for the department to develop a standard notice or a standard format for something. that isn't actually etched in statute, it just gives them the ability to develop those kinds of things. So that may be one way to do that, and typically what happens is there's a lot of industry input in that environment. I think the other part is that we know, and I think it's because of today's seminar, we know the insurance department is looking to get more education and training on what CJAD is all about. So I'm very happy that we had a chance to have a company who actually has gone through it, that we can share their experience with them as well. And I think you're going to be speaking, and Joe's going to be speaking to the department in the next month or so about corporate governance annual disclosure, because they're way up high on the learning curve. Theoretically, they haven't even submitted their bill yet. So they're at least starting maybe a little bit earlier than most in terms of trying to get them educated on what they should be looking at, maybe learn from the challenges other states like Indiana has gone through and can avoid some of those learning curves. There are forums for the regulators to do that, whether it's through the NAIC or other avenues, and they usually do try to use those tools to their advantage.
So Joe, can I follow up with your previous response? So despite companies' best interests and to do the right thing because these things have value, let's assume a company concludes, I don't think it makes sense to put a board assessment process in place. I don't think it makes sense to put term or age limits in place for my board members. I don't need a board formal training program in place. So truly, with their best interest, they've concluded that those things don't make sense for our organization. But they're still going to be faced with CGAD and reporting on these issues. So how would a company respond in that case? Are they almost being forced by CGAD to put these things into place that they necessarily don't want to put in place because it doesn't apply to their organization?
That was certainly how we interpreted it. Like, we don't need this. Well, it's in here, so we better get one. Well, yeah, but this really doesn't. We don't. This board training. We have now 6 board members. Train them. It would be easier if there was some sort of understanding that this, maybe not all of these apply to all companies, or at least to the same extent.
And I think that's absolutely right. A lot of the things are simply not going to apply. If you can say this about a model law, the beauty of it is not that it's telling you have to do certain things or you have to have certain things in place, but what it's saying is justify and provide the rationale. If you are a board and you are going to say, we don't think we need to have a 360 review, we don't think we need to have an evaluation process in place to see how we're doing, could you, and I think I had said this, could you legitimately write in a document that's submitted to your regulator, signed by your CEO or secretary, that says why? Well, I don't think we need it because, hey, there's only 4 of us and we don't do training, and there very well may be a logic and a rationale that goes there. But what I would say is, if you're going to take the position that certain governance things don't apply, you have to be able to articulate it and provide that rationale for 2 people. And I try to keep saying this. One's for the regulator and the other's for yourselves. You have to be able to say, look internally and say, here's why we are not going to do these 360 reviews, because, as Scott's situation, we're a very different animal, and it would be
Probably 3 people, probably a DML carrier as well.
Well, it would be helpful if that was. I think the way the model law is written, the implication is that you all, if you're replying to this, if this applies to you, you'd better get these done. You better have them. And I think that if it does apply to you, most people probably do need it. But there are certain things that it would be helpful if that was better stated.
Question here?
I mean, aren't these ultimately going to be requirements? I mean, if the board of directors is being held accountable for these things, and now we're producing this corporate governance annual disclosure, we're going to give justification for decisions that we're making at the board level. Now we're giving that to the regulator, and the regulator is then making a judgment based on the information that you're providing. Now they're ultimately accountable. isn't it inevitable that some of these things are just going to become requirements?
Well, I think some of the things are already requirements. If you view the financial examination process as the way regulators implement some of the attributes. So everything I described under enterprise risk management, if you don't think that's a requirement, then you're mistaken. So while the Corporate Annual Disclosure Requirement Act requires disclosure of it, the financial examination process is already evaluating companies on this, and as I mentioned before, there are letters already going back to management informing them of deficiencies in their enterprise risk management framework. So it would be hard for any of you not to proceed forward on having board oversight and governance of ERM. That's a requirement, whether you see it in a statute or not. It's there.
Doug, I'd like to follow up on your question because I can put my, I'm that recovering regulator. And my concern, I think, is exactly where you're going with this. If in your question, it's, well, even though there may be discretion by the entity on what they want to answer and how they want to answer it, how will the regulator ultimately decide if that's adequate or not, especially when they have the ability to review other CJADs as well for companies that are similarly situated as yours. So does it just, that regulatory creep occur where, okay, we want to sort of adopt all these best practices? My guess is over time that will occur because, one, you're not going to want the regulator breathing down your throat, always asking you the same question, well, why don't you do this when other companies similarly situated as you do that? So I do think you will see that creeping, more having to do this kind of stuff go on.
And I share that concern. I balance that against the fact that I don't think a regulator has the ability nor wants to really try to run the company and get into that minutia. However, there are going to be things that absolutely the regulator could and should provide feedback. So if your rationale is, hey, we don't do board training because we have a board of 4 and each one of them sits on the board of a Fortune 100 company and they also just happen to sit here, and that's, off the top of my head, that's probably a pretty good rationale, and I would assume a regulator would look at that and say, understood. If you say, we don't like to have board training because they're all really old and they can't see the screen, I hope the regulator says, no, that's not a good rationale. I do share your concern because regulatory creep is always a problem. But in this case, if you have solid practices that you can justify, whether you are or not doing something, and you can articulate that, you should be able to articulate it internally to yourselves, here's why we do or don't do that, and you should equally be able to articulate that to a regulator to the point where the regulator says, fair enough. I'm not here to try and run your business, I just want to understand that you're not taking an inappropriate level of risk by not.
We had a question.
You have another question?
I just had a question if anybody knows of any insurance regulation currently that is different for the size of companies. In other words, any insurance regulation out there now applies to all companies, no matter what size you are. Is that correct?
So the question from the audience was, does the regulator, through its statutory or regulatory scheme, do they differentiate among insurers based upon size? The answer is absolutely. The most obvious answer is the requirement to file the ORSA statement. There's a $500 million threshold, and if you're below that $500 million threshold, you don't have to file that. The department has also publicly stated that for small insurers, many of them are mutuals, but not all of them, they do meet the accreditation standards, but because of the complexity and limitation of these companies, that they don't have to go into the same level of depth. So the department does have that kind of discretion, and I think they've tried to exercise that to the best of their abilities.
And the model law and regulation, I'm actually trying to find it quickly and I can't, but there's somewhere in the model law or regulation that specifically recognizes that your responses and what you do have to be kind of commensurate with your size and your business. So although it's not creating kind of a bright line rule, hey, if you're under 100 million, you do this, if you're over, you do that, it's really saying we recognize that different companies at different sizes and different risk appetites will be governing themselves differently. Just explain to us why.
Well, and it's getting back to the template. If they're developing a template, are they going to develop more than one template depending on the size of the company? That was where my point was really driving. You'd almost have to.
Well, speaking as, again, I think we were more of a small company when we started this. I agree with Joel. You should, as many of these as you can do, you should do.
Oh, I agree.
It can only help you. It's just that the trick is just getting the appropriate buy-in you need to do.
We have a question back here.
Ron, let's follow up on your regulatory creep. We talk about submitting the report to the regulator, right? But if I remember the legislation, or the model, it talks about the ability of the department to charge back to the companies the use of a third-party reviewer of these things. And it makes sense from the department standpoint that they use these third parties because they're stretched. So are we submitting the report to the known regulator who knows what, in their mind, the template's supposed to look like? Or instead, are we going to be submitting reports to any number of varied third-party consultants who themselves first have to come up with the answer, what's this thing supposed to look like? And then submit that forward to that department overseer, who then, I guess, reconciles all of this over a period of how many years before the market really understands this is what the department really needs or wants. I just see the reconciliation process taking, again, years. And I don't know, Scott, if you have any feedback from what you saw over in Indiana, did they use outside consultants? Was there that kind of internal debate going on about, what's a good report look like to begin with?
I don't think they had any idea what a good report looked like. I couldn't tell if they were using outside consultants, but I think they're in the same position that we were in, just that they had it's brand new to them too, so they're struggling through it like everybody else.
But I think you raise a very interesting question about the department giving guidance to outside consultants who may be reviewing these. What are you supposed to be? What format should it be looked at? How should it be looked at? Because if you allow a free-form document to go through, every consultant is then open to reviewing it the way they best see it, which then adds to potentially higher costs to the operating companies. This issue of using outside consultants has been raised with members of with the department and the General Assembly, and we're still in discussion on some of those things. The reality, though, is the department does have resource issues, and their draft of the Model Act does say that they can use outside consultants, and there's a separate discussion going on with the department and the industry, along with with members of the General Assembly, about putting some controls around the use of outside consultants so that everybody gets treated fairly in that process. We don't have a definitive answer at this point, but this discussion is obviously going to be a big part of the development of the final form of our CJAT law.
I think, just to follow up on that, if you're going to have a whole bunch of different consultants, they may come in with a different direction or view as to what they think it ought to look like, and then they send it back to the insurance department with 45 different, this is the way I think we ought to look at it, and then we start right back to ground zero, or we're all having to rewrite everything instead of the department getting specific direction and a specific model that we all go with.
I think that message that you're saying is if you use 30 different consultants, you're going to 30 different ways they're going to do it. And I would hope, and I would think the department would see that from their perspective as an operational challenge as well, and want to figure out a way to streamline that. The good news is we do have a representative from the department here. This is going to be recorded, and I've told Joe we're going to make it available, Joe DeMemo, we're going to make it available to him for further training. Because the one aspect of the training that the department's going to be getting in the near future is going to lack the real world feedback on what it really took. So I think this exercise in questions, review from a company that went through it is going to be invaluable for them as they move forward.
Yeah, Ron, kind of my own thoughts on that. Having lived through the implementation of Sarbanes-Oxley, having lived through the implementation of ORSA, and now looking forward, my experience has been that, and kind of getting to your comment, this kind of starts, but it takes like 3 to 5 years to evolve before what I'll say a general standard kind of gets developed in terms of what the regulators are going to be looking for and what's deemed to be acceptable.
Right, well, because everybody's high on the learning curve.
Everybody's high on
Right,
that.
I agree with that, but I think the more structure you can put around it, the easier it is to move down the learning curve, and maybe it will expedite that process a little more.
Yeah. My other thought too, and Joe and I were chatting about this early this morning. At the same time, and I recognize that this is a burden for both the management and the boards of the companies that are represented here, but there probably is an opportunity to actually learn things about the organization that you hadn't really given a lot of thought to before.
Right.
So I'd like to think that there's an upside to all of this other than just creating a lot of documents. Yeah, Lisa.
If I could add, because I'm an auditor, and so I'm working with Scott on the project, I came from the examiner, the auditor's perspective, and was a more black and white view, and came up with comments, and he would say, we don't care, but you have to care. Well, no, we don't. Why? And so I think the evolution of the process of getting the board involved and deciding was, we do this because, and this is how we manage our company, and they had a very strong stance of why they're doing their corporate governance the way they were. It wasn't that way, I don't think, at the beginning of the process, and it evolved to that, which I think is in the spirit of what it is. I mean, I still struggle sitting and listening. How do you articulate that in a report and give it to a regulator? And what could he have written and put in front of me that I was, oh yeah, you're good. I don't know what that looks like, and I'm still struggling with that as well. But I think it's mainly, why do you have your corporate governance as it is, and why is it covering the risk that the regulators are concerned about in these areas?
So if you don't mind, I have a question for Scott, and you may not have the answer yet, or you may have some anecdotal evidence. So now, Indiana has been doing this now for 2 years? Or about a year? Do you know how your corporate governance annual disclosure is being used by the department during the course of their mandatory financial exams?
I asked that question. I asked that question, and they said, when I asked that, what are you going to use this for? I fully expect that they will ask us about it during we haven't gone through an exam since we submitted it. I expect they will ask us about it. But just like you said, I think that this is still, it's going to take a few years for this to fully implement.
Well, if I recall, Joe said yesterday, Joe DeMemo in his presentation, that NEIC delayed a vote on this as an accredited. Wasn't that the point he made yesterday?
I think that's correct.
Right, so they didn't specifically vote on it, but there is a deadline to do it. So if it's not part of the accreditation process, I guess you can make an argument that it may or may not be included.
They've indicated that it will come, so I feel
Okay.
Another question?
For Scott, how did you get your senior management to take this all seriously and work together to get it accomplished?
I use the department's name in vain a lot.
I'm sorry.
I ended up saying repeatedly that we can do this now because we can do this now so I can file this thing timely, or we can do it after we file an inadequate report and they make us do it. I just kept referencing regulators. I mean, I might be overstating the amount of pain that it took, but if you've got an entrenched management system and entrenched management structure that's not used to the, I think most people probably do have a system that's not used to that level. It's much like ERM. We implemented ERM, it was the same thing. It's not stuff, it's an additional layer of work. So I said repeatedly, look, we can do it now or we can do it later. And then I would file, no, we can't actually do it later, we have to do it right now. And you just have to keep repeating it until, you just have to beat them into submission.
Well, Scott, somebody obviously had to twist your arm in order to get that done.
Yeah.
Look what happened.
This is actually what happened when I told my boss that we were going to file it with.
Okay.
So can I make it?
Sure.
I have a question. I know I'm going to put our one regulator on the spot because I don't know if you will have the answer, but you could clearly go back to the department. Do you know how they're looking at timing the due date for these reports? Is it going to follow on the same cycle as your annual reports? Is it going to be reviewed internally by the same financial analysis staff, or will this be part of the examination staff? Have you given any thought to that kind of thing? And if you don't have an answer, that's fine. It's just, make sure, Joe, here's this concern or question so that you can start thinking about it.
I don't have an answer, but I will talk to Joe.
Okay, thank you.
What would you recommend as far as timing?
Well, we do know the challenges that have been going on in the financial analysis area. You're using outside consultants to try to expedite the process. That, following that same timeline, in my mind's eye, just exacerbates your existing problem, with trying to get timely, just meet that accreditation standard. So, I would think maybe a different time frame may be appropriate. I haven't talked to my members or my board, but, end of year reports are a busy time for people and all that other, and then you have MCAS reports that have to come in at some point. So, scheduling these things probably at a different time makes sense, so I would ask you to think about that.
So if I could just say, so I come from the school of where Joel started with is, I think everything that's in the Corporate Governance Annual Disclosure Model Act, they are best practices. If you look at any corporate governance association, you'd see virtually every one of them as best practices. And so I would encourage all of you to look at the reasons for adopting them, as opposed to the last part of this conversation is worried about, if you choose not to, what happens in the regulatory front. But I would encourage you to, there's good things in these practices, and I would encourage you to think through them. However, and this is where maybe Joel might have a difference of opinion, I think if you objected to all of them, it will be very difficult for a regulator to find that, depending on how you word your Corporate Governance Annual Disclosure Model Act. I think I'm not in favor of it, I don't agree with it, but something as simple as board assessments, if you choose that's not something you want to put in place, if you had your board minutes reflect that there was a discussion at the end of the meeting asking for input and feedback on how we did, and you documented in your minutes that in essence you did an oral assessment process, whether you did it or not, it'd be very difficult for anybody to accuse you that you don't have a board assessment process in place. My only point here is, if you want to object to all these good practices with a free-form report, I actually think you can get away with it. And they won't. I don't subscribe to that, I don't agree with it, but I don't really think this CGAD is like a gotcha moment where you really got to put all this stuff in place. I think these are good tools, good practices. You ought to think about them. I think you should take the spirit of them, that it's going to make your company better and provide better governance. But I would encourage you not to approach this from a threat of regulation, that they're somehow going to dock you because you don't have one of the particular practices in place. I think there's a way, in that case, that they may not even be aware that it's not in place.
I agree with that completely, and I'll take it maybe even one step further. I'm looking through the template from Indiana, and I'm familiar with the regs. If you can't answer these questions, if you can't sit there and answer these questions, you don't know your company. I mean, these are not difficult questions that you shouldn't already be thinking about. And looking at what practices you have in place and providing the rationale. If you can't provide the rationale for why you don't have a board review process, then you've got bigger problems than just, hey, what am I reporting to the department? You've got corporate governance problems, and that's why, I really do look at this as a very good tool, kind of, a mirror. It's a mirror that you hold up against yourself and look at what you're doing.
Which is why you need to get the board involved, or get them on board quickly.
Yeah.
To that end, in terms of a sneak preview of Pennsylvania's corporate governance law, we'll make sure that that gets published as part of the event materials, along with the NAIC model, because they're substantially the same, and the NAIC draft model regulations as well. So you can have it in one spot to download it as needed.
And then, just before we wind this up, Ron asked me to let any and all of you know if you have any additional thoughts, or if you have any topics related to this that you think would be of interest to the group, please let him know. We can build that into future agendas.
Well, let me expand upon that. So right after this meeting adjourns, this august group and a couple of other people are going to be meeting to develop a series of 4 one-hour webinars on corporate governance. And, as bright as we are, we would like to get your input now on what some of those topics could be. So, Vaughn, if I could ask you to be the note taker if anybody has a topic, because I didn't bring anything to write with. Just throw ideas out, and we're going to start talking about them. Otherwise, you're going to have to deal with the topics we decide were your most important topics. And I'm not sure we have that ability to do that so well. So what I'm going to do now to kind of force people to think is, the people in the back row who haven't had to look at us as closely, you guys are on the spot to kind of come up with an idea or two. Just yell it out that we can use as potential topics. So, yes, sir.
I think the process of the board evaluating its own performance is something that you, the directors, can benefit from.
Thank you. Lisa, can I ask you to come up with one?
The sections that he outlined, we go section by section. That's a lot more than 4, but it just seems like a good starting point.
Okay.
Ron, we had an idea over here.
Yes, sir.
Just one of you had brought this up. Sometimes to have this conversation with the board, it may be better to have somebody come in, like a facilitator. How would you approach that? So to put them to have that discussion.
Okay. Yeah, like bringing a facilitator in for the board, because you as the CEO, you don't want to have to argue with your board over the importance of this kind of thing. You'd like that independent third party to say, hey.
How you can go through the
Right.
process.
Okay.
I'm sure you're going to do it, but I think one segment has to be on ERM.
Okay.
The detail today was good. I couldn't think it was fast enough. But that is, I think that will help them a lot, understanding how to put that into the governance.
Okay. I thought there was one back there. Yes, sir.
You could make something that would be directed specifically to a board member that we could show, we provide to a board member. That would be very helpful.
Okay. Great. Randy, did I see you raise your hand?
No.
Would you like to?
Well, balance.
is an important element in anything. And we do a lot of these things that we're talking about already. It's instilling within the mindset of your directors the importance of it. And it speaks kind of, I think, where Eric was going with an outside counsel. It's always easier to appeal to higher authority. But it's about making sure we look at what the pitfalls are with these kind of things as well. Because it comes with a cost. And I think that's what we would all struggle with is what's going to be the expense associated with as a small company. We got to watch our expenses. So could you reach a point where a small company in central Pennsylvania can't attract the kind of talent you need to serve in a director position? And that's a cost that none of us want to face.
Thank you.
If you're talking about reviewing board of directors, how about senior management?
Okay. Sounds good. Now I'm going to put our regulator on the spot. Is there some kind of training you think you would like to see PAMIC offer to both companies, or all our training is open to regulators at no cost, but we have the issue with the governor's office and all that other stuff. But you know, if you're in a position to share what you think is important, whether now or after you get your training, we'd love to hear from you as well. Okay? Thank you.
Okay.
Good ideas.
Well, with that, let me thank our panel members. Thank you all for attending.